Hello friends, today's topic is illustrations. In this topic we will understand the practical scenario of the provisions that we have discussed under the topic income from other sources. This will help us to understand the provisions in a better way. So friends, first illustration on your screen. Examine whether the following are chargeable to tax. If yes, then under which head and the amount which is liable to tax. Correct? So we are here, we have to determine the chargeability under which head and the amount which is liable to tax if the amount is provided. First is salaries payable to members of parliament. Friends, for one or two illustration, the level will be a basic level. It will just help you to understand the provisions that we have discussed under the topic income from other sources in a better way. So starting one or two illustration, you will get a basic level. Then one or two illustration are, you can say, the level of difficulty is bit more. Yeah. So the first part, salaries payable to members of parliament. Salaries payable to members of parliament. There is no employer and employee relationship between the members of parliament and government. Accordingly, the payment made by the government to MPs, to MLAs will be taxable under the head income from other sources. This is we have specifically discussed while understanding other provisions, residual income by way of an example. Correct? So salary is payable to members of parliament. It is chargeable to tax. Yes. And the income of head is income from other sources and amount will be liable to tax in the hands of the members of parliament. Then rental income in case of a person engaged in the business of letting out of properties. So the person has a rental income and is in the business of letting out of properties. In such a scenario, such an income will be taxable under the head income from other sources. Such an income will be taxable under the head profit and gains from business or profession. Not income from other sources, but profit and gains from business or profession, right? Because the business of the person is letting out of properties. Accordingly, such an rental income won't be taxable neither under the head of income from house property nor income from other sources. It will be taxable under the head profit and gains from business or profession. So the amount will be chargeable to tax. The head of income is profit and gains from business or profession, and the amount will be liable to tax in the hands of the SSE who is conducting the business of letting out of properties. Correct? Then third point is receipts without consideration. So friends, receipts without consideration, we have studied this, we have discussed this under section 56 2, right? Subsection 2, 56, we have discussed this, where is any consideration received, any money received without consideration is subject to tax in the hands of the recipient in the year of receipt. Correct? So friends, the amount will be chargeable to tax. The head of income is income from other sources and the amount is liable to tax in the hands of the recipient. Correct? So third one is income from other sources. Dividend on shares in case of a dealer in shares. So friends, in this case, here is a dealer of shares. The SSC is dealing in shares. If there would have been any income from purchase or sale of securities, then the same would have been taxable under the head profit and gains from business or profession. But now the person who is dealing in shares has dividend income, or you can say has investment income. So the income which has been derived from shares is not from the business or profession. The same has been derived on account of investment income. The shares were held not as stock in trade but the shares were held for the investment purpose, and accordingly dividend income in the hands of dealer in shares will be taxable under the head income from other sources. Reason being, the shares have been held for investment purpose and not for the purpose of dealing in shares. Correct? So dividend income for dealer in shares will continue to be taxable under the head income from other sources. Correct? So it will be chargeable to tax. I mean, obviously it will be dependent whether 1150 section is applicable or not, wherein whether dividend distribution tax has been paid or not. If it has been paid, then the dividend income will be exempt in the hands of the SEC. Else, interim dividend, normal dividend, interim dividend or deemed dividend will be taxable in the hands of the recipient. Correct? Deemed dividend, obviously, section 222E, where dividend distribution tax is paid by the company, the SEC need not pay taxes again on such a dividend income. So friends, dividend on shares in case of dealer in shares, it depends on whose hands it will be taxable, chargeable to tax. If dividend distribution tax is paid by the company, then it won't be chargeable again in the hands of the recipient, in the hands of the recipient shareholder. And the head of income is income from other sources. Correct? Fifth point, friends, rental income. In case property held as stock in trade for 3 years. Friends, rental income from a property held as stock in trade for 3 years. Now, here the person has rented out the property which was held as stock in trade, and that too for 3 years. So as per provisions contained in income from house property, if you remember, we had discussed that the builder who has received completion certificate will be allowed to keep the residential accommodation without renting it out. The house property can be kept for 2 years, meaning the builder who has house property as stock in trade for a period of 2 years, it can be held as stock in trade without considering it for the purpose of income from house property. For the purpose of considering it deemed to be let out property, the builder will be allowed to keep the property as not to be deemed let out property for a period of 2 years. So for a period of 2 years, the builder is provided an exemption wherein where the house property has received completion certificate, then from the end of the previous year in which completion certificate is received, for a period of 2 years, the builder is exempted. The builder is exempted from taxability of income from house property. But here you can see the property has been rented out. The foremost condition for exemption was the property shouldn't be let out. Basic intention was you should try to sell the property for a period of 2 years after receiving completion certificate. But here the builder has rented out the property, and also the property is held as stock in trade for more than 2 years. Accordingly, the property will be taxable in the hands of the builder. And friends, the property will be taxable under the head income from house property only because the exemption was provided under the head income from house property, and accordingly, if conditions of exemption are not fulfilled, then the taxability also will be taken care by that respective head of income. Accordingly, since exemption has been provided under the head income from house property, the taxability, if conditions are not fulfilled, then taxability will be under the head income from house property only. So, for fifth point, the amount will be chargeable to tax in the hands of the builder, and the head of income is income from house property. Correct? Friends, for these pointers that we are discussing, I won't be mentioning separately in the solution. I feel this is itself the solution that I am narrating. So you can note down your answers in your note section, or if you want, I will just mention the head of income in this solution, right? I will just mention the head of income so that this will be available for your reference purpose, correct? So friends, first point, salaries payable to members of parliament. Head of income I am mentioning, income from other sources. IFOS is income from other sources. Second is rental income in case of person engaged in the business of letting out of properties. Profit and gains from business or profession. Third is income from other sources. Fourth is income from other sources. Fifth is income from house property, correct? Now sixth one, salary received by a partner from his partnership firm. Same will be a business income for the SSC for the partner. Accordingly, the same will be taxable under the head profit and gains from business or profession, correct? Under section 28. Then income from machinery, rental income from machinery. Friends, in this section there are two possibilities, wherein if rental income is the business of the SSC, if the rental income is the business of the SSC, then the same will be taxable under the head income, that the same will be taxable under the head profit and gains from business or profession. If renting out of machinery is not the business of the SSC, then the same will be taxable under the head income from other sources. So answer to this question depends on whether the SSC is into the business of renting out of machinery or not, correct? So seventh point friends, profit and gains from business or profession or income from other sources, correct? You will have to provide a reasoning for that, when it will be profit and gains from business or profession, and if the same is not falling from profit and gains of business and profession, then it will fall under the head income from other sources, correct? Eighth point, in case of retirement, interest on employees contribution if provident fund is unrecognized. So taxability to be determined in the hands of the employee, wherein there is withdrawal of the employee's contribution, right? And the fund is unrecognized fund. So friends, it won't matter whether 5 years have been completed or not, correct? Since it is a unrecognized fund, any withdrawal of employee and employer contribution will be taxable in the hands of the employee. And we have discussed that interest from employees contribution is always taxable under that income from other sources, correct? Accordingly, interest on employees contribution at the time of withdrawal from an unrecognized provident fund, friends, it will be taxable under the head income from other sources. The exemption of 5 years, the exemption of 5 years won't be eligible to an unrecognized fund. If it would have been a recognized fund, if withdrawal would have been from a recognized fund, in that scenario, we could have put a note wherein if the withdrawal, if after continuous service of 5 years, the SSC is withdrawing the amount from a recognized provident fund, then withdrawal proceeds would have been exempt. However, since it is a unrecognized fund, the interest income from employees' contribution will be taxable under the head income from other sources, correct? So the amount will be chargeable to tax and the head of income is income from other sources. Next is a sum of 90,000 was received as gift from non-relatives by Mr. A on the occasion of the marriage of his son. So the occasion is marriage, but the marriage is not of the SSC. The gift has been received by Mr. A, and that too from non-relatives. So applicability of subsection 2 of section 56 will be that exemption which is provided is a relative should provide a gift, right? Here a non-relative is providing, and also the exception of receiving the gift at the time of marriage is also not getting fulfilled. Accordingly, it is falling in none of the exceptions, and the amount which is received without consideration, money received without consideration, will be taxable under subsection 2 of section 56, and accordingly the same will be taxable as income from other sources in the hands of the recipient, which is Mr. A in this case. And friends, the last one, last provision, interest on enhanced compensation of 1 lakh received on 31st of March 2020 for acquisition of urban land, of which 70% relates to previous year 1819. So 1 lakh has been received, right, in the previous year 1920 for acquisition, for compulsory acquisition of urban land of the SSC. In this regard, he has received enhanced compensation, of which 70% relates to 1819. As we have discussed in subsection 2, section 56, clause 8, interest on enhanced compensation is taxable on receipt basis, correct? So, the proceeds of 1819 received in 1920 previous year will be taxable on receipt basis. In the previous year 1920, 1 lakh will be taxable in the hands of the recipient, and a standard deduction of 50% will be eligible as per section 57, correct? So 50,000 will be taxable in the hands of the SSC, correct? So friends, for ninth pointer, if you ask, 90,000 is the amount which is liable to tax, correct? And 10th point is also income from other sources, right? The head of income, it will be chargeable to tax in the hands of recipient, and the amount which is chargeable is 50,000 after standard deduction of 50% under section 57, correct? So friends, this concludes the first illustration. Now friends, the next illustration. The following details have been furnished by Swara pertaining to assessment year 2021. Cash gift of 75,000 received from her friend on the occasion of Swara's wedding anniversary. So it's a wedding anniversary and received from a friend and not a relative. Accordingly, money received without consideration, it will be taxable under the head income from other sources. Correct? Entire amount will be taxable since the amount is also exceeding 50,000. On the above occasion, which is marriage anniversary, jewelry worth 5 lakhs was gifted by her sister living outside India. So now friends, the jewelry which is included under the definition of property, correct? And the property has been received without consideration by Swara on the occasion of wedding anniversary. So wedding anniversary is not mentioned in the exception case. However, it falls under the exception of gift from a relative. Accordingly, jewelry received from a relative will be exempt from taxability under the head income from other sources. Correct? So let's mention point by point. Computation of taxable income of Swara for assessment year 2021. Correct? First is money received without consideration, which is cash gift, 75,000. Then jewelry. Let's provide a reasoning also, because I can see there are around 4 adjustments. So if it is for 8 marks, then 2 marks for each adjustment. Yeah. So there will be marks for reasoning also. So reason is received from received from a non-relative, correct? And the occasion the occasion of wedding anniversary is not covered in the exception. Because of this reason, the amount is getting taxed in the hands of the recipient. Second pointer, jewelry. It is included in the term property, correct? Second, occasion of wedding anniversary. Occasion of wedding anniversary is not covered in exception. However, having said that, however, gift has been received from gift is received from relative, correct? Accordingly, accordingly, nothing is taxable in the hands of recipient, correct? Third pointer. Okay, the third point, on her daughter's wedding, a friend assigned in XYZ's favor a fixed deposit held by the said friend in a scheduled bank. The value of deposit and accrued interest on the said date was 70,000. Okay, so here we can see her friend has assigned in XYZ's favor, correct? It should have been Swara's favor and not XYZ. Okay, so interpret it as, read it as, on her daughter's wedding, her friend assigned in Swara's favor a fixed deposit held by the said friend in a scheduled bank. The value of the fixed deposit and accrued interest on the said date was 70,000. Correct? So the amount is exceeding 50,000, and fixed deposit, whether it will be included under the term property or it will be considered as money received without consideration, needs to be seen. And also, on the daughter's wedding, the amount has been received by Swara. The amount has been received by mother. Accordingly, since the recipient, it is not the recipient's wedding, it won't fall under the exception. Okay, and the gift has been received, the money has been received without consideration from a non-relative. It doesn't fall in second exception also. And fixed deposit, now fixed deposit friend, it is not specifically included under the term property. Accordingly, it can be termed that it is money received without consideration. Right? So, since a benefit has been received by the recipient in the form of money received without consideration, accordingly, the same will be taxable in the hands of Swara, as the amount is also exceeding 70,000. Correct? So the amount is nil. Then third point. Third point is nothing but fixed deposit. The pointers that we have discussed is, it is daughter's wedding and not recipient's wedding. Correct? Then next pointer is money consideration is received from a non-relative in this case. Correct? And fixed deposit, though not included in the term property. However, it can be termed as money consideration received, correct? And also the amount received is exceeding 50,000, correct? Accordingly, money consideration received, money received without consideration, money received without consideration from a non-relative is taxable in the hands of recipient. Accordingly, the amount is 70,000. So friends, you will acknowledge that there are several factors which needs to be considered. In point number 3 only, we had to analyze who is the recipient, whether he is falling in the exception or not. So since it was a daughter's wedding and not recipient's wedding, accordingly the exception was not available. First. Second, the amount was received, the money consideration was received from a non-relative, which is a friend in this case. Also, another criteria was whether the benefit received is a property or money consideration. In this case, the property fixed deposit hasn't been mentioned specifically under the term property. So, however, the term can be considered as money consideration received, and accordingly, fixed deposit, though not a property, has been considered, can be termed as money consideration, and accordingly, the amount received, since it is exceeding 50,000, has been considered as taxable in the hands of the recipient SSC. Correct? And the last point, friends, on 31st of December 2019, Swara received 6,50,000 towards interest on enhanced compensation from state government in respect of compulsory acquisition of a land effected during previous year 13-14. So in this case, there is compulsory acquisition of Swara's land, and Swara has received 6,50,000 towards interest on enhanced compensation. Correct? So 6,50,000 has been received by Swara on account of compulsory acquisition in the previous year 13-14. Out of this interest, 2,50,000 relates to previous year 16-17, 1,50,000 in the previous year 17-18, and 2 lakh in 18-19. So as you can see, the consideration is part of the previous year in the preceding years, in the preceding 3 years. 2,50,000, 1,50,000 and 2 lakhs. So is this, say, incurred 30,000 by way of legal expenses to receive the interest on enhanced compensation. So friends, here the expenses have also been incurred as legal expenses by the SSC. How much interest on enhanced compensation would be chargeable to tax for the assessment year 2021? Correct? Just a second. The total of the preceding years I am trying to do is nothing but 3 lakh, 4 lakhs and 6 lakhs. The total is amounting to 6 lakhs, and here the amount has been mentioned as 6,50,000. You can assume it to be 6 lakhs, friends, wherein the total enhanced compensation as interest received by Swara should be read it out as 6 lakhs and not 6,50,000. It is a typo error. Okay. So in the fourth adjustment, friends, the amount has been received in the previous year, the interest on enhanced compensation has been received in previous year. So as per 56(2)(8), interest on enhanced compensation is taxable on receipt basis, correct? And deduction of 50% of the amount received is allowed as per section 57. This will be a standard deduction, and any actual expenses incurred by the SSC won't be allowed as deduction to the SSC. So 6 lakh entirely will be taxable. 50% deduction of 3 lakhs will be available out of 6 lakhs, and 30,000 which has been incurred over here as legal expenses won't be allowed to the SSC because SSC is already allowed a standard deduction of 50%. The concept is similar to income from house property, wherein 30% standard deduction is allowed to the SSC against the rental income or against the deemed to be let out property, correct? Similarly, over here as well, against the interest income, interest on enhanced compensation, taxable against the gross income, 30 against the gross income, 50% income will be eligible for standard deduction. So friends, fourth pointer, interest on enhanced compensation will be 6 lakhs less standard deduction, section 57, correct? And here section is nothing but 56 to 8. You can say at the rate of 50%, correct? So 3 lakhs taxable interest is nothing but 3 lakhs. Also, legal expenses incurred for earning interest income won't be allowed as deduction as per section 57(4), and also for this part also this is 4 only. So the same section 57 states that no other expenses will be allowed to the SSC. If a standard deduction is allowed to the SSC, no other expenses will be allowed to the SSC for interest on enhanced compensation received. So legal expenses incurred for earning interest income won't be allowed as deduction, and as per section 57, correct? So friends, this concludes the second solution, wherein we have to determine the total taxable income of Swara, and the points that we have touched base is consideration, money consideration received from a non-relative, and what is the occasion, whether it is a wedding occasion, wedding anniversary, or whether the same has been received at the time of recipient's wedding or not, correct? And the type of property which has been received. Different property that we have seen over here is fixed deposit, wherein we had to consider that as money consideration, correct? Then we have understood practical scenario of computing interest from enhanced compensation, wherein 50% deduction is allowed to the SSC and actual expenses incurred for earning the interest income is not allowed. However, a standard deduction of 50% is allowed to the SSC. So friends, this concludes the second illustration. Now friends, the next illustration, examine the following transactions in the context of Income Tax Act 1961. Mr. ABC transferred 1000 shares to XYZ on 31st of December 2019 for 4 lakhs when the market price was 6 lakhs. So ABC is transferring shares to XYZ. XYZ is the recipient of shares wherein shares has been received without consideration by XYZ. Accordingly, taxability will be determined as per section 56(2)(10, right? The indexed cost of acquisition of shares for Mr. ABC was computed at 4,90,000. The transfer was not subjected to STT. Okay, what we are supposed to do? Determine the income chargeable to tax in the hands of ABC and XYZ. So friends, we have to look from the point of view of not only the recipient but also from the point of view of transferor. So Mr. ABC has transferred shares to XYZ without consideration, correct? So let's go case by case. Part 1 is computation of income chargeable under the head computation of income chargeable to tax in the hands of ABC and XYZ. For ABC, in the hands of ABC, since there will be implications under section 50CA, wherein unquoted shares, if transferred for less than fair market value, unquoted shares, if transferred for less than fair market value by the SSC, in such a scenario, the sale consideration for the purpose of computation of capital gains, the sale consideration will be the fair market value on the date of transfer, correct? So section 50CA will be applicable, wherein unquoted shares if transferred for less than fair market value of the shares, then fair market value will be the sale consideration. So computation of capital gains in the hands of ABC, this is what we are calculating, and accordingly the sale consideration is nothing but 6 lakhs. Also here let's put a note assuming shares are unquoted shares, correct? There is no mention of the category of the shares. Accordingly, since the transaction is closely falling under section 50CA, we have assumed that shares have been transferred, shares which are transferred are unquoted shares, and accordingly 50CA will be applicable, correct? So sale consideration will not be 4 lakhs, which is the actual amount received, but 6 lakhs, only because the fair market value of the shares is 6 lakhs and not 4 lakhs, correct? So sale consideration as per section 50CA is 6 lakhs less index cost of acquisition. Index cost of acquisition, COA, is nothing but cost of acquisition. In examination, please write in full form. So index cost of acquisition is nothing but 4,90,000, and long-term capital gains. Why long-term? Because index cost of acquisition has been mentioned. Indexation is available only if the holding period is equivalent to a long-term capital asset. Indexation is only available for a long-term capital asset. Accordingly, long-term capital gains is nothing but 1,90,000, and as far as the rate will be concerned, it is indexation benefit availed by the SSC. Indexation benefit availed by the SSC, the rate of tax will be 20%. Correct? So long-term capital gains taxable in the hands of ABC is 1,90,000. So tax implication in the hands of Mr. ABC is taxability of long-term capital gains of 1,90,000. Then we will have to determine taxability in the hands of XYZ. Correct? In this case, amount taxable will be the amount which has been received. First of all, whether shares falls under the definition under the term of property, yes, and the amount of benefit as per 56(2)(10), the amount of benefit for a movable property should exceed 50,000. Correct? In this case, 6 lakh is the market price of the shares and 4 lakh is the face value of the shares, is the consideration, is the actual consideration. So 6 lakhs minus 4 lakhs is 2 lakhs. 2 lakh is exceeding 50,000. Accordingly, since the benefit is exceeding 50,000, 56(2)(10) will be applicable, and such a benefit will be taxable in the hands of the recipient SSC. So shares qualifies as movable property, and section 56(2)(10) is applicable as the benefit is property is received, as property is received without consideration, not without, is received inadequate. He has paid 4 lakhs, so inadequate consideration, inadequate consideration. So market value is nothing but 6 lakhs less consideration, consideration paid by the SSC is 4 lakhs. Amount taxable under section 56(2)(10) is nothing but 2 lakhs as the amount is exceeding 50,000. Correct? So friends, taxability in the hands of XYZ is nothing but 2 lakhs. So in the hands of ABC, the long-term capital gains taxable is 1,90,000, and in the hands of Mr. XYZ, the amount is taxable under section 56(2)(10), and the amount taxable is 2 lakhs, which is the benefit amount which is accruing to the recipient SSC in this case. Correct? Now friends, the next is Mr. ABC is employed in a company with taxable salary income of 10 lakhs. Fine. He received a cash gift of 1 lakh from a trust. It is registered under 12A in April 2019 for meeting his medical expenses. Is the cash gift so received from the trust chargeable to tax in the hands of Mr. ABC? So friends, cash gift has been received from the trust. Any amount received from a trust which is registered under section 12A or 12AA will be falling under the exception which has been mentioned under section 56(2)(10). So even if the cash gift is exceeding, even if money without consideration has been received by the recipient is exceeding 50,000, where the amount has been received from any trust which is registered under 12A or 12AA, in such a scenario, friends, the amount will be exempt in the hands of the recipient as per section 56(2)(10). Correct? So, part 2 is money received without consideration is received from a trust registered under section 12A. Accordingly, nothing will be taxable in the hands of Mr. ABC, even if the amount is exceeding 50,000. Correct? As per section 56(2)(10). So, part 2, if we consider, taxability in the hands of Mr. ABC will be nil, since the amount has been received from a trust which is registered under section 12A. So friends, this concludes the third illustration as well. Now friends, in next illustration, Mr. Chiku reports the following transactions to you. Received cash gifts on the occasion of his marriage of 1 lakh. So 1 lakh was received on the occasion of the recipient's marriage. It includes gift of 20,000 received from non-relatives. So friends, out of total 1 lakh, 20,000 has been received from non-relatives. That is fine. However, the total 1 lakh rupees has been received on the occasion of the marriage. Since the entire amount has been received on the occasion of the marriage, it won't matter whether the same has been received from a relative or a non-relative, because any money consideration received, or you can say even the property also, any consideration received at the time of marriage is totally exempt under section 56(2)(10). So friends, even if the gift is inclusive of non-relatives, it doesn't matter, since the amount has been received on the occasion of the marriage of the recipient. The entire amount will be taxable even if the same is exceeding 50,000, even if the amount received on the occasion of the marriage has been received from a non-relative. Correct? And if we go adjustment by adjustment, what we have been asked is determine the amount chargeable to tax in the hands of Mr. Chiku for the assessment year 2021. Correct? So friends, computation of amount taxable in the hands of Mr. Chiku for assessment year 2021. Correct? So friends, the first adjustment, which is money without consideration received on the occasion of the marriage, amount taxable is nil. Amount received from non-relatives on marriage will be eligible for exemption. Correct? Second part, on his birthday, he received a gift by means of a check from his mother, the amount being 60,000. So friends, here the amount has been received, money has been received without consideration, and the amount is exceeding 50,000. So 56 to 10 is applicable. However, since the amount has been received, since the gift has been received on the occasion of birthday, also the relative concept, since the amount has been received from a relative, the money consideration has been received from relative, the same will be exempt in the hands of the recipient. So the only criteria which is being met by the recipient over here is the gift has been received, money consideration has been received from a relative, correct? However, occasion, if we asked, birthday occasion doesn't fall under the term exception. It doesn't fall under exception. Amount is exceeding 50,000, correct? However, since the amount has been received from relative, the same will fall under the exemption part. As money consideration, as money consideration, as money consideration has been received from a relative, nothing will be taxable in the hands of recipient as per section 56 to 10, correct? So here also amount is nil. Third point, on 31st of December 2019, he acquired a vacant site from his friend for 1 lakh. So immovable property has been acquired. The stamp duty valuation authority fixed the value of site at 1,95,000 for stamp duty purpose. So friends, in case of transfer of immovable property, in case an immovable property is received without consideration or inadequate consideration by the recipient, the amount of taxability will be determined as 50,000 if the benefit is exceeding 50,000 or 5% of the consideration, whichever is higher. In this case, if we see 1,95,000 is the stamp duty value and 1 lakh is the consideration amount. 1,95,000 minus 1,95,000 and 5% of the consideration is nothing but 5,000. So 95,000 or 5 lakhs, not 95,000, 50,000 or 5% of the consideration, whichever is higher, will be the range of the benefit. Since actual benefit of 95,000 is exceeding 50,000 in this case, accordingly entire amount of benefit, which is 95,000, will be taxable in the hands of the recipient SSC. So friends, third point, immovable property is received with inadequate consideration, correct? Immovable property is received with inadequate consideration by the SSC, and taxability for determining the benefit, 50,000 amount of benefit taxable in the hands of the recipient is point A, 50,000 or 5% of the consideration, which is nothing but 1 lakh. 1 lakh is the amount into 5%, correct? Which is nothing but 5,000, and here 50,000. Whichever is higher, and higher of the two is 50,000. So this will be the cap, this will be the range of benefit. Any amount, any benefit exceeding 50,000 will be taxable. So in this case, as the total benefit is exceeding 50,000, which is 1,95,000 minus 1 lakh, which is the consideration paid. As the benefit is exceeding 50,000, which is nothing but, that is 95,000. 95,000 will be taxable in the hands of amount of 95,000 will be taxable under section 56 to 10. So taxability amount is nothing but 95,000. Then fourth point, he bought 1,000 shares of listed company from another friend for 90,000. The consideration paid is 90,000. The value of share in the stock exchange on the date of purchase was 1,50,000. So shares and securities falls under the definition of property. So a movable property has been transferred with inadequate consideration, wherein 1,50,000 is the fair market value of the shares. However, the consideration paid is 90,000 only. 1,50,000 minus 90,000, the same is exceeding 50,000, and accordingly 50,000 will be taxable in the hands of VSSC. Correct? So fourth point, friends, shares falls under the definition of the term property, as movable property is transferred with inadequate consideration and the benefit is exceeding 50,000. Accordingly, 60,000, which is nothing but 1,50,000 minus 90,000, will be taxable in the hands of the recipient as per section 56 to 10. So friends, 60,000 is taxable. So total amount chargeable to tax in the hands of Mr. Chiku for the assessment year 2021 is nothing but 95,000 plus 60,000. In adjustment number 1 and 2, the amount was nil, correct? And for third, the amount is 95,000. The fourth is 60,000. So totally the amount is 1,55,000 as income chargeable to tax in the hands of Mr. Chiku. So friends, this concludes this illustration. Now friends, the last illustration, and thereafter we will start with MCQ questions. On your screen, ABC Limited, engaged in manufacturing business, discontinued its activities and decided to lease out its factory building, plant and machinery and furniture from 1st of April 2019. So leasing out of factory building, plant and machinery from 1st of April 2019. Compute ABC's income for assessment from following information. First, interest paid on hundi and other loans which were given as deposits on interest to others. Okay, so funds have been borrowed on hundi by the SSC, wherein interest paid in this part is 80,000, correct? And this deposits, this amount which has been obtained has been provided on loan to others also, wherein amount has been received based on hundi and other loans, and this has been transferred to some another person for the purpose of interest, correct? So here interest has been paid by the SSC of 80,000. Consolidated lease rent received per month, which is referring to the first para, wherein SSC has decided to discontinue his business, discontinued his existing business, and he will lease out his factory building, plant and machinery and furniture. So income from leasing out is nothing but 1 lakh per month, correct? So the amount is per month. Expenses incurred on repairs of plant and machinery, of building, plant and machinery is 20,000. Friends, as per section 57.1, as per 57.2 and 57.3, repairs, depreciation is allowed to the SSC in the year in which they are incurred. As you remember that section 30, 31, 32, read with section 38 has been borrowed from profit and gains from business or profession. This section will get applied under the head income from other sources. The provisions of section 30, 31, 32 will apply under the head income from other sources also, as per section 57.2 and 57.3. So repairs, insurance premium as well as depreciation, these expenses if are incurred by the SSC for a property which has been let out on hire. Property here is building, plant and machinery, building, plant and machinery, furniture, correct? Accordingly, if income from letting out on hire from such properties can be taxed under the head income from other sources, accordingly expenses related thereto, expenses related to depreciation, expenses related to repairs and premium paid on such property will be allowed as deduction to the SSC under section 57, correct? So expenses incurred on repairs is 20,000. Also, fire insurance premium on plant is 10,000. This will also be allowed under section 57. Interest received on deposits. So, first adjustment was related to interest paid, and here interest has been received on deposits. Correct? So, two types of income we can see till now in the hands of SSC. First is lease rental income, wherein assets of building, plant and machinery, furniture has been let out on hire, has been leased out by the SSC. So, lease rental income from renting out the property, from leasing out the property is 1 lakh per month in the hands of the SSC, wherein specific deductions will be allowed to the SSC. Till now we have seen expenses which will be allowed to the SSC will be third adjustment and fourth adjustment. Third is related to repairs and fourth is related to premium paid, insurance premium paid on the assets. So point number 2 is the income. Third and fourth are the expenses which will be allowed as deduction as per section 57, and first adjustment is expenses which will be allowed as deduction to the SSC against the interest received on deposits under point number 5, correct? Brokerage paid on hundi loan taken. So brokerage was taken on the hundi loan, so expenses incurred for the purpose of earning income taxable under the head income from other sources. This will also be adjusted against point number 5 against the income which is interest received on deposits of 1,20,000. Now unabsorbed depreciation for the previous assessment years, this will be deducted against the lease rental income. Interest remitted to a non-resident outside India on which tax was not deducted at source. So this may be loan which has been taken on hundi, wherein interest amount is payable to a non-resident outside India. However, since TDS is not deducted, it will be not allowed as deduction as per section 58. So 10,000 will be allowed as deduction to the SSC. Since it is disallowed under section 58 where TDS has not been deducted. Provisions are similar to the provisions of profit and gains from business or profession under 40A1. Depreciation for the year will be allowed to the SSC against the lease rental income. Legal fees paid to an advocate for drafting and registering the lease agreement. This will be allowed as deduction to the SSC against the lease rental income. And factory license fees paid for the year is 5,000. This also will be allowed against the lease rental income. So friends, in the illustration we are expected to compute ABC's income from the following information consisting of 11 adjustments, consisting of 11 pointers. And as we have discussed, there are two types of income which are coming up for an SSC who has discontinued his business. First is lease rental income, income from letting out on hire of building, plant and machinery and furniture. And second is interest on deposits. Both will be taxable under the head income from other sources, as it will not fall in any other head of income, in any preceding heads of income. We cannot say it is profit and loss, income from profit and gains from business or profession, only because the leasing out of factory building, the leasing out of property is not the business of the SSC as such. Fine. So any income from leasing out, any income from interest on deposit, as the same cannot be termed as profit and gains from business and profession of the SSC, as business and profession, as business of the SSC was manufacturing business, as you can see over here, manufacturing business. Accordingly, income which is leased out, income from letting out on hire of the properties, as well as interest on deposits, both will be taxable under the head income from other sources. Correct? On your screen, let's start with the illustration. Here we have 4 adjustments and here remaining adjustments. Let's continue from here itself, wherein computation of total income of ABC for assessment year 2021. Correct? So we will have to bifurcate based on income, based on the 2 heads of income, and then expenses which will be allowed as per section 57 for the income earned, for the income taxable under the head income from other sources. Particulars amount. First is income from letting out on hire of building, plant and machinery, building, plant and machinery. Correct? In this case, if you see, 1 lakh is 1 lakh per month is the amount into 12, as the property was let out, as the properties were let out on hire from 1st of April 2019, which has been stated in the first para of the illustration. Accordingly, 1 lakh into 12 is nothing but 12 lakhs, it will be taxable in the hands of the assessee as income from other sources as per section 56 to 3. Correct? Now let's jot down one by one adjustment which has been mentioned, which will be allowed as deduction under section 57. Correct? First is interest paid. We will take it separately. Consolidated lease rent received is 1 lakh. We have considered. Third point, expenses incurred on repairs of building and plant and machinery. So you can say current repairs, which will be allowed as per section 57. So friends, 20,000 will be deducted. In examination, you can mention this amount in the inner column of amount. So instead of one column that I have prepared, you can prepare two columns, one outer and one inner. You can mention the deduction amount in the inner column, then taking the total of expenses allowed under section 57 to the outer column. For simplicity purpose and due to space constraint, I am mentioning it over here. Current repairs, right, 20,000. Then insurance premium is nothing but 10,000. Then a further adjustment of point number 7, 2,50,000. Depreciation 1,60,000. Legal fees to advocate is 2,000 and factory license fees of 5,000. So factory license fees and legal fees needs to be mentioned of 5,000 and 2,000 respectively. Legal fees, it will be allowed as deduction to the SSC, which is nothing but 2,000. License fees is 5,000, will be allowed as deduction under section 57. Then comes depreciation. Depreciation allowed will be, how much was the amount? The amount is 1,60,000, as well as unabsorbed depreciation of 2,50,000 will be eligible. Unabsorbed depreciation will be brought forward, and will be part of the depreciation for the year, and both the thing, depreciation as well as unabsorbed depreciation, can be allowed under any heads of income. So friends, amount is 1,60,000 plus 2,50,000. 1,60,000 unabsorbed depreciation, which is nothing but 2,50,000. Accordingly, total income from letting out on hire is nothing but let's total this: 20,000, 10,000, 32,000, 37,000, 37,000 till here. So 37,000 plus 1,60,000 plus 2,50,000 of unabsorbed depreciation is nothing but 4,10,000 is the total deduction allowed under section 57, which will be deducted from 12 lakh, which is nothing but 7,90,000. Correct? So 7,90,000 is the income from letting out on hire of building, plant and machinery and furniture. Correct? Then part 2 is nothing but income from interest deposits. It will be taxable under section 56. amount is nothing but 1,20,000. To this you will have to adjust point number 6 of 5,000, correct? Point number 8 is a separate adjustment. I will mention a note for it. So 1,20,000 minus 5,000, and first adjustment is 80,000. So 1,20,000 friends less interest paid is nothing but 80,000, which has been incurred in order to earn the interest income. Accordingly, it will be allowed. Also, brokerage fees of 5,000, correct? So net income from interest on deposits is nothing but 35,000, correct? 1,20,000 minus 80,000, which is 40,000, minus 5,000 is 35,000. Also, you will have to put a note for interest paid to non-resident is not allowed to be deducted, as applicable taxes is not deducted and paid by Mr. ABC, by ABC Limited. So as there has been error on the part of the SSC in not deducting TDS on the interest paid to a non-resident, in such a scenario 100% amount will be disallowed, which is a provision similar to 40A1 of the profit and gains from business or profession. Okay, interest paid won't be allowed as deduction to the SSC. So friends, ABC's income for assessment year 2021 is nothing but 7,90,000 plus 35,000. 7,95,000 is income from letting out on hire the properties of the SSC, which is 7,90,000, and income from interest on deposit is nothing but 35,000. Accordingly, 8,25,000 is the total income which will be taxable in the hands of ABC Limited for assessment year 2021. So friends, this concludes the illustration part, and now we will be starting with the MCQ portion. So friends, the first MCQ: income from letting of machinery, plant and furniture is chargeable to tax under the head income from house property? No. Income from letting out of machinery, plant and furniture, generally it depends on whether the same can be considered as taxable under the head profit and gains from business or profession or not. If not, then the same will be taxable under the head income from other sources. Friends, you will have to understand the essence of the topic income from other sources. I mean, it is a residual income category. If any income is not getting taxed in any of the preceding heads, if the income is not getting taxed in any of the preceding heads of income, then it will be taxable in the hands of income from house property, income from other sources, only if it is not falling in the preceding heads of income. So income from letting of machinery, plant and furniture, if it is not getting taxed in any of the preceding heads, then it will get taxed income from other sources and chargeable to tax under the head income from house property. House property includes any land, any building or land appertaining thereto. It doesn't include any machinery, it doesn't include any plant and furniture. Okay, so point number A is to be discarded. always, point number B, always chargeable to tax under the head profit and gains from business or profession. It is not always chargeable to tax. If if the business of the SSC is letting out of machinery, plant and furniture, then it will be chargeable under the head profit and gains from business or profession. If it is not a business of the SSC, then it will come to income from other sources. So it is not always chargeable to tax under the head PGBP. So point number B can also be discarded. Always chargeable to tax under the head income from other sources? No, we cannot say this. It could be either profit and gains or income from other sources. Chargeable under the head income from other sources only if not chargeable under the head profit and gains from business or profession. Perfect. So option D is the answer, wherein if the business of the SSC is not letting out of machinery, letting out on hire of machinery, plant and furniture. In such a scenario, income from letting out on hire will be taxable under the head income from other sources. This is what we have seen, we have discussed under clause 3 of subsection 2 of section 56 as well. Correct? So friends, point D is the correct answer, wherein income from letting out of machinery, plant and furniture is chargeable under the head income from other sources only if the same is not chargeable under the head profit and gains from business or profession. Point number D, friends, is the correct answer. Point number 2, in respect of winnings from lottery, crossword puzzles, or race, including race, horse race, or card game, etc. Both deduction under Chapter 6A and basic exemption limit are allowed. No, it is not allowed. Deduction under Chapter 6A is allowed, but basic exemption cannot be exhausted. No, I feel both are not allowed. No deduction under Chapter 6A is allowed and basic exemption limit cannot be exhausted. Okay, so point C is saying no deduction under Chapter 6A and basic exemption limit cannot be exhausted. Correct? This could be the correct answer. No deduction under Chapter 6A is allowed, but unexhausted basic exemption limit can be exhausted. No. So point number C, friends, wherein we have studied that income from winnings from lottery, crossword puzzles, horse races, card games, etc. is taxable under income from other sources, wherein taxable rate is determined as per section 115BB. Taxable rate is 30%, including surcharges if applicable, plus health and education cess at 4%. And no allowance or no expenditure will be allowed to the SSC against such an income. No deduction under Chapter 6A will be allowed to the SSC. Also, basic exemption limit benefit, the slab rate benefit, won't be eligible for deduction against such an income. Correct? So, no deduction under Chapter 6A and no benefit of basic exemption limit will be allowed to the SSC as per Clause C. Clause C is the correct answer. Option C is the correct answer. Moving on to the next part. The deduction allowable in respect of family pension taxable under the head income from other sources is 30% of the pension or 15,000, whichever is less. It is not 30% actually. It should be 33.3% of the pension, correct? However, 33.3 pension or 15,000, whichever is less, should be the correct answer. Correct? So option D is the correct answer in this case, wherein family pension received by the family members of the employee. Family pension will be monthly pension received by the family members of the employee, wherein a deduction of 33.3% or 15,000, whichever is less, will be allowed to the SSC, and in certain cases entire amount can be claimed as exempt. In case of a person, a military personnel, who while performing his operational duties was that in case of death of such a person, entire amount of family pension will be exempt. Also, a person who is honored by President by Paramveer Chakra will also be eligible. The family pension received by his family members will be exempt entirely. So in that case, question of deduction of 33.3% or 15,000 doesn't arise. However, for other categories, allowed deduction is 33.3% of the pension of 15,000, whichever is less. Option C is the correct answer. Next one, Mr. ABC has acquired a building from his friend on 31st of December 2019 for rupees 15 lakhs. So an immovable property has been acquired by ABC. The stamp duty value of the building on the date of purchase is 15 lakh 70,000. So friends, here you can see the stamp duty value of the property, of the immovable property, is exceeding 50,000 rupees. Is exceeding 50,000 rupees. Also, 5% consideration will have to be taken care of, correct? Wherein the 5% of the property is 15 lakhs, 1,50,000 is 10%, and 75,000 is 5%. So friends, 75,000, which is 5% of the consideration, or 50,000, whichever is higher, 75,000 or 50,000, whichever is higher, if benefit is within this range, if benefit is less than or equal to the range of 75,000, then nothing will be taxable in the hands of Mr. ABC. Correct? Again, on your screen, benefit is nothing but, amount of benefit is nothing but 15.70 lakhs minus 15 lakh, correct, which is 70,000, correct. Now this benefit, we have to see whether it is within the range which is permissible by 56(2), which in this case is higher of the following, which is 50,000 or 5% of consideration, which is 15 lakhs, correct. So in this case, friends, 5% is nothing but 15 into 5%. It is 75,000 indeed. So 75,000 or 50,000, whichever is higher, is the applicable limit. So 75,000 is the amount. Since the amount of benefit, you will see amount of benefit is less than 75,000, nothing will be taxable in the hands of the SSC. Nothing will be taxable in the hands of Mr. ABC. Accordingly, the correct option should be nil. Correct? So friends, this is how an MCQ question may be asked to you, and you may be required to prepare working notes as well. But for MCQ questions, you are not expected to, prepare any workings as such. In your calculation, a working sheet will be provided to you in which you can mention your understanding, mention your calculation, do such working in the examination. A separate sheet will be provided to you in the examination. So friends, as you can see, nothing is taxable in the hands of the SSC. Next, fifth, Mr. KK received 60,000 from his friend on the occasion of his birthday. Anything received on the occasion of the birthday will be taxable in the hands of the SSC. Birthday is not in the exception. Also, friend is not doesn't fall in the exception part for the taxability. Accordingly, 60,000 entirely will be taxable. Also, 50,000 won't be deducted from the amount. Correct? That's why option A has been mentioned to confuse you, wherein 10,000 is taxable or only 50,000 is taxable. The entire amount is exempt. No, it is not exempt only because the gift has been received, the consideration has been received from a friend, not a relative, and the occasion is not marriage but birthday. The occasion is birthday. Correct? So the entire amount of 60,000 is taxable in the hands of the SSC. Sixth, Mr. ABC, aged 66 years, received dividend of 15 lakhs from a domestic company in previous year 1920. Tax chargeable under section 115 BBDA is 10% on the entire amount. So friends, the provisions of section 115 BBDA, as we have discussed, anything exceeding 10 lakhs, dividend income received by the SSC exceeding 10 lakhs, anything in excess of 10 lakhs will be taxable in the hands of the SSC, and the rate of tax applicable is 10% as per section 115 BBDA. So friends, 15 lakhs is the amount. 15 lakhs minus 10 lakhs, 5 lakh amount will be taxable at the rate of 10%. So tax chargeable under section 115 BBDA, 10% will be on, should be on 5 lakhs. Correct? So the option mentioned over here is 5 lakhs. Correct? And let me tell you the significance of 66 years here. I mean, where you can go wrong is 66 years the slab benefit. If you are confused that even the slab benefit is to be deducted. So slab benefit for an SSC, for resident SSC who is aged more than 60 years but less than 80 years, the basic exemption limit is not 2 lakh 50 but 3 lakhs. Correct? So 15 lakhs minus 3 lakhs. If we deduct the basic exemption limit, so 12 lakh could be the answer. For this also an option has been provided. Correct? Also, nil option is provided if you think that dividend income is never taxable in the hands of the SSC. And the entire amount of 15 lakhs is also provided where you think that no deduction. If you are not aware of provisions of 115 BBDA, then there are chances that you may choose options other than B, which is the correct option. Options other than B may be chosen in case you are not aware of the provisions of section 115 BBDA, and examiners are smart enough to spot that if you are not aware of 115 BBDA, then what are the possible options that you may choose, and you will find some or the other options in combination with the correct option. So friends, as per section 115 BBDA, tax is to be deducted, 10% rate will be applied on anything in excess of 10 lakhs, which in this case is 15 lakhs minus 10 lakhs on 5 lakh, section 115 BBDA will be applicable. Correct? 7th, in respect of dividend received from domestic companies in excess of 10 lakhs by an individual, both deduction under Chapter 6A and set off of losses against such income are allowed. No, it is not allowed. No deduction under Chapter 6A is allowed, but loss is allowed. No. No deduction under Chapter 6A is allowed, and no loss can be set off. Option C could be correct. Deduction under Chapter 6A is allowed, but set off is not allowed. No. Both deduction under Chapter 6A as well as loss under loss as well as loss cannot be set off against such an income. So friends, this is an extension of 115 BBDA. If you are aware of the provisions of 115 BBDA, then the thing that we had discussed in 6th MCQ, in extension to that, in the 7th point, there is a further provision under section 115 BBDA, wherein against such an income, against the income which is exceeding 10 lakhs, you will not be allowed any deduction under chapter 6A. You will not be allowed any set off of losses against such an income, against the income of 5 lakhs in a previous example. So option number C is the correct option. Now 8th and 9th. 9th will be the last MCQ, and with that we will conclude the topic of income from other sources. Mr. AJ has received a sum of 60,000 on 24th of December 2019 from relatives on the occasion of his marriage. Anything received on occasion of the marriage and also amount has been received from relatives, even if the amount is exceeding 50,000, entire amount will be eligible for exemption. So options: entire 60,000 is chargeable to tax, no. Only 10,000 is chargeable to tax, no. You do not get any deduction of 50,000. If at all, let's say the occasion was not marriage and the amount has not been received from relative, in such a scenario 60,000 will entirely be taxable. You do not get any deduction of 50,000 amount. So 10,000 also, in case it would have been taxable, 10,000 also is not to be considered. Either entire amount is chargeable to tax, or so entire amount is exempt from tax in this case. Correct? Option C is the correct option. Now point number 9. The deduction in respect of interest on enhanced compensation of 1,50,000 received during the previous year 1920 will be, so deduction is always 50%. A 50% standard deduction is allowed to the assessee, and apart from 50% standard deduction, no further expenses are allowed to the assessee as per 56 to 8. 56 to 8 states the taxability of interest, and the deduction part is covered under section 57. So deduction on interest on enhanced compensation should be 75,000, being 50% of 1,50,000. If you are not aware of the provisions, then it will be like 30% has also been given, wherein income from house property 30% standard deduction is available. Correct? Even that option is made available over here, or either nil or none of the above option has been also mentioned. So if you are aware of the provisions, with we will be able to recognize the correct option, and in this case it is option B. So friends, this concludes the MCQ part of the illustrations as well. Thank you.